All right, hello and welcome to Camel Finance. I'm your boy Camel and we're back today. So, coming off of yesterday, of course, we saw the Federal Reserve raise another 25 basis points. Not really a surprise since we had pretty much 99 point something percent chance, according to the CME, that was what we were going to see. When the CME probabilities are that skewed to one side, they're very seldom wrong. So, not at all surprising. I was kind of hoping that we might see a little pause and then we could get a blow off top. But given where the weekly cycle is, that wouldn't have really made a lot of sense. So it kind of makes sense that we're here. We've seen the 25 basis point. That was, like I said, all but priced in already. The Federal Reserve and Jerome Powell clearly have absolutely a no mercy approach at the moment. I've seen people compare the economy at the moment to a ship without a captain, but in my opinion, it's much more akin to an aeroplane piloted by a kamikaze pilot. That really is the situation we're in. I think they are deliberately running this thing into the ground. They're going to continue this no mercy approach for some time until something breaks. I spent a lot of time in the early days of this channel warning about the reset, warning about how we're going to see massive rounds of inflation that are going to impoverish the masses, warning about how we're going to see people lose their homes. I was also warning a lot about a complete catastrophic financial meltdown. But since the lows were in and since we started to get long and enter this big bull market that we've been in since October, I kind of put all of that out of my mind and just focused on capturing the trend, or at least the bulk of the trend across these assets. But this to me was a little reminder that, this is not funny anymore. A lot of people are going to lose their houses. We're going to see rents go through the roof because we're now at a point where there are so much interest to be paid for landlords that the rent they're currently charging is significantly below their monthly interest payments on their buy-to-let mortgages. So we're going to see this cost transferred to renters. Of course, that really hurts people that are already in a less privileged position as it is. And whilst I still think after we get a little pullback, we're going to see more upside for the stock market and certainly more for Bitcoin, this 25 basis point hike was somewhat of a sobering hike for me because, like I said, I kind of dropped the ball a little bit in terms of thinking about the reset. I've kind of just been focused on capturing the trend and doing the best I can to provide good content and hit the trades for you live on the channel. But make no mistake about it, we're going to see bank failures because of this. We're going to see people lose their houses. We're going to see rent increases, like I said. And overall, more printer is coming. And I know when I say this, I often get challenged. I think this is the thing I get challenged the most on. There's two things, actually. First of all, when I say the print is coming, there's always a bunch of people that come out and say, no way, they're not going to print again. But believe me, they are, because it's a feature of fiat currency. Okay, they are. And I'm going to show you that in a second because they've already started doing it. In fact, let's just show you right now. This is the Fed M2. They're already printing again. Okay, so that is going to happen. And the second thing I get challenged on the most is when I say that I think gold is about to break out and move to all-time highs. I think silver is going to do really well. And people say, nah, gold's not going to do anything. But again, if they're going to keep printing and the dollar's going to keep breaking down, we've got weekly cycles behind us in gold. I see reason for the precious metals to do well. I'm going to do a full gold and silver deep dive in a week or so, within the next week or two. And we've got a target for silver of around $90, okay? Of course, we're going to see 3K gold around the same time. Anyway, I'll get into that. I'll prove my point when I make the video. But for now, like I said, we've got this 25 basis point hike. Printer is coming, as I've already shown you. They're already starting to print again. They're just not really calling it printing yet. But all roads lead to more printing, more debasement of currency. And unfortunately, this 25 basis point hike, like I said, is going to do damage to a lot of people. Really, really nice summary here from Minavini. Look, Powell has promised to keep at it until the job is done. He is making it clear today that the job is not done. Going into today, this is of course yesterday, there was complacency about inflation will soon slow below 3%. Powell says currently no recession is being forecast. Contrary to popular narrative, rents are at new highs. According to Zillow, yes, more supply is coming. There are nearly 1 million multifamily units under construction, which is the most since 1973. But demand remains strong. 1 month annualized supercore is around 2.9%. Labour market remains tight and strikes are looming. Powell says labour supply has improved, but says we don't see a 2% target being achieved until 2025. He said inflation has proved to be more resilient than expected. And for a side note here, remember the way the year-over-year CPI metrics are calculated show that at the next CPI readout, it's going to be very, very difficult to get a significant drop below the prior readout, as we've been seeing consistently for around a year now. So this is going to be the first year-over-year calculation where we're comparing it to a lower number for the first time as opposed to a higher number. So getting a drop at the next CPI readout, a significant drop, is going to be much harder than it's been for the past 12 months. So far, the market reaction is muted. It's starting to reverse off the highs intraday. Let's see how the closes look. And this is what I've been saying, isn't it? Let's get through this week and then we should have the read on the market. And of course, we'll need to see how the stock market trades over the subsequent weeks. Minervini's models are positive. S&P 500 buy signal issued January. He says while a pullback could occur at any time, he does expect pullbacks on the S&P 500 to be contained to 5 to 10%. And it's interesting because 5 to 10%, I'll jump straight into a chart so we can see this. If we were to correct from here, 5 to 10%, look, there's 5%, okay? So I wouldn't even get stopped out on a 5% pullback. And if we were to pull back from here to, say, 10%, you know, we're going to be in this neighborhood of support and this upward sloping red support line. So some kind of decline into a weekly cycle low somewhere in this neighborhood would be perfectly reasonable from my technical analysis perspective. So it's interesting to see that Minervini, according to his system, also thinks that pullbacks are going to be contained to 5 to 10%. So a pullback is likely coming in the stock market. That's okay. We've been expecting that. We're prepared for that. We continue to posture defensive. Like I said, all roads lead to more printing, and we can already see that now. There's no other way to service the debt. The thing is, we live in this new era of MMT, don't we? Modern monetary theory. And what they do is they just say, it doesn't matter how much you can print because we're a world reserve currency. So we can take on infinite amount of debt, and that doesn't matter either because we can always just service that debt by printing more money. That's the world we live in. So we are going to see more printing. More printing means assets go higher, particularly gold and silver, and Bitcoin, of course. And remember, like I often say on this channel, Bitcoin is the best hope for those facing a currency collapse, like in Argentina at the moment. Look at the state of this. Of course, the rate hikes pressure the banks as well. Now we've got $44 billion bank PacWest, down almost 30%. So last time we saw banks collapse as a result of aggressive rate hikes, remember, what happened to Bitcoin? Well, Bitcoin went on a massive, massive upside rally. Is this going to be the catalyst? Could this be a catalyst? Could more and more of these banks start to fail? And if so, will that drive Bitcoin higher? In other news, I'm kind of a couple of days late to this, but BlackRock has apparently recommended an 84.9% Bitcoin allocation for optimal portfolio performance. So that's pretty funny. But remember, there's no one that really is 80% invested in gold and Bitcoin. And there's a simple reason for that. The financial advisors and all other industry players hate these assets because it cuts them out of the value chain. When you buy gold or Bitcoin or silver, physical gold and silver and Bitcoin withdrawn to cold storage, you don't need a broker or an advisor or a manager. Remember, there is no counterparty risk in any of these three assets, gold, Bitcoin, or silver. And this kind of ties back to that pension video I did a little while ago where I said I don't really trust pensions. And whilst the risk is probably quite small, we could argue about that. That's a conversation for another day. There is counterparty risk in your pension, okay? You are having to trust somebody to not lose your money and to someday allow you to have it. And that just simply doesn't exist. There is no counterparty risk with physical gold, physical silver, or Bitcoin on a cold wallet. All other asset classes, no matter what they are, carry counterparty risk. So whilst we got to probably be patient for, a couple of weeks into these cycle lows, it's looking like Bitcoin seller exhaustion has almost completed. If you look at all of these green instances, every time we got one of these signals, which we've got right now at this moment in time, we went up thereafter, right? Shortly thereafter, good things happened to the price of Bitcoin. There was one exemption, and that was this one here. But the key difference is whenever this signal occurred before, Bitcoin was already in a bull market and it led to further upside. The exception here is when this signal occurred, we were in the depths of a bear market, and this was the one exception where it led to further downside. So according to this metric, sellers are likely close to being completely finished here. And again, it tells us to be open-minded about better than expected outcomes over the next couple of months for Bitcoin. At the same time, we've still got the tightest weekly Bollinger Band squeeze in history. Sets us up for a massive, massive move. Does not predict direction, but does tell us that when we get a squeeze this tight, expect violent moves in either direction once that direction has been established. I found this and I thought this was really, really interesting. If you look at the cycle lows on this chart, okay, 152, 3K, 15K. So we're going up. I mean, 2 orders of magnitude here, 1 order of magnitude, 1 order of magnitude, right? Does this mean that we're going to be in the 6 figures for the next cycle low? I just want to leave that there as a question. Over in traditional finance, we are very, very close to the S&P 500 posting a 5th consecutive monthly gain. So why is this significant? Well, in every other time that this has occurred, denoted by these blue arrows, price in the S&P 500 was higher 1, 2, 3, 6, 9, and 12 months later, as you can see here. And for the NASDAQ, slightly more choppy results, but statistically significant advantage here to being positioned long following 5 monthly positive closes. So again, everything is pointing to more upside before we have to go down, even though in the short term, it's likely we're going to have to see some pullbacks. And speaking of these pullbacks in the short term, traders are all in at the moment chasing this rally higher. Usually when this happens, we will get some kind of correction, and I find the timing of this very interesting since we know that a weekly cycle low pullback is coming. It doesn't mean we have to see a major top here, but I do think a pullback into that weekly cycle low would be more than healthy before then we can finally attack the all-time highs. So not a great deal has changed. We're still long, we're still strong, we've still got our stop choked up for the S&P 500, still holding this trade all the while we're above this blue upward sloping support line, and we've still got that weekly and daily cycle low in focus before I can get truly back to being the biggest bull on YouTube again. NASDAQ right into support at the moment, upward sloping. I said all along, if we lose this blue horizontal, I'm going to just cut this trade and sit patiently on the side. I really don't see any reason not to do that at this point. The Dow Jones, we're still long on a type 1 breakout, meaning no pullback, no retest as of yet. Could we be open to seeing a little bit of a rollover? Possibly. But I wanted to point this out actually. The Dow led very rapidly and violently on the way up, and then it spent all this time in consolidation. So I do wonder if now what we're going to see is the Dow lead again, whilst we get the pullbacks in the S&P and the NASDAQ, only for then the Dow to top first, while the NASDAQ and the S&P put in their final blow-off top move. Melt-up chart still looking constructive, as you can see. Are they going to ban Congress? Are we going to get rate cuts? Probably not too far away now, but I do think, like I say, probably going to get that pullback before we can go higher and then roll over. VIX all the way down on a 12 handle now, so almost a 13 handle, but we're on a 12 handle for the VIX. As I keep saying, I will basically be sitting out of this trade until we get much further down in both time and a little bit further down in price. When I think it's time to long the VIX up to the major big numbers, up to new highs, I will be certainly letting you know well in advance, but I do think we're probably going to be sat out of the VIX for a few months. Apple's still in beast mode, still holding its support, so we're long, we're strong, and we continue to push. Look at the dollar go. Rolled over, starting to potentially work its way down towards the mid-90s, so all is going well here. And of course, gold and silver are benefiting from this. So again, I know a lot of people think that, gold has to die from here for some reason. I don't really know why. I don't really see the point of that. We've got this, big breakout. We're not that far away from all-time highs. If we scroll out, we've got 1, 2, 3 attempts, then we've had a small correction. Usually on the fourth, we would do something like this. That's completely to be expected. So we're long and strong. This represents a weekly cycle low, telling us we should have somewhere in the neighborhood of, say, 16 to 24 weeks of upside rally ahead of us. So I'm continue to be long and strong. I wanted to point this out for gold. I often say when we come into cycle lows that we look for a 2 drives pattern. So we make a low, we bounce up, and then we undercut that low, form the daily cycle low, and buy the swing here with a stop below. And I wonder if that's what we're going to see from gold any day now. So we've got our first drive, a little counter trend bounce. If this was to roll over and undercut the low from a couple of days ago and then make a swing, I think we can call that a daily cycle low. I think I can add a position on a swing confirmation and move the stop up from here to just below this low, and then I will have a second position on gold. So that's what I'm looking to do if the market will give it to me. Obviously, I don't know if this is just going to shoot straight up or whether we are going to get an undercut, but any undercut of this low and a swing for me is a buy and an add and a move a stop up. If that setup shows up for silver, then I will do the same for silver as well. So if we can get an undercut, I think we can buy there, move the stop up from the first position, and look to start stacking positions one on top of the other for the precious metals, as I do think massive upside is not too far away. And scrolling out, if you haven't seen this already, and go to a weekly time frame so we can see. Look at this absolutely massive downward sloping red resistance line. We're not far away from cracking that. I think if we crack that, $30 comes quickly thereafter. That is to be determined, of course. XRP still consolidating, so not much more to say about that. I know a lot of you like it, but long and strong, continue to push, see what the market can give. Hopefully we can do something like this. Ethereum hanging around break even. This has been a very boring trade, hasn't it? So we'll see what happens from here. And of course, Bitcoin. So are we going to get a breakdown, retest, resumption out of this bull flag? That seems what the cycle is pointing at as far as I can tell. So could we do something like this maybe and then roll over? Yes, anything and everything is on the table. But I do think that for me, that weekly cycle low, or excuse me, daily cycle low for Bitcoin is in focus. And it's down there that I'll be interested in getting long. And then as always, if we can get down in that neighborhood for Bitcoin, then I think we can also start to add Coinbase and MicroStrategy positions. Maybe this is going to break out prematurely, but I wouldn't be surprised if we see a little rollover given where the cycles are. Keeping an eye on that one for sure. Same is true of Riot. This is looking to be a breakout today, but we'll see what happens. I want to see some closes for the week, and the same is true of Marathon. So be looking to add if we can get a little bit deeper down with pullbacks, but for now, We'll continue to push the positions, and I want to conserve capital for those weekly cycle lows, as I keep saying. But we're getting ever closer, aren't we? We're probably, how many, let me measure this for you so we can be sure. We're 18 odd sessions, give or take a few, from finding those cycle lows. So a little bit of patience is going to go a long way, I think. So that's it from me. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.